Okay, I mean, August to Jan, it's not as bad. Yeah, that's a pretty good, yeah, timeline. And how much was that loan for?
3.1 million.
Oh, nice. Okay.
Yeah,
So
because it was
pretty happy.
the construction of 6 stores and equipment purchase and the inventory. Yeah, I believe I have it on my LinkedIn. The chef, it was about 2 years ago. His was about 1 million for loan. The hair salon was, I believe it was like 330,000.
Yeah.
In essence, let's say like I think 650 would probably be the lowest. And it would have to get an explanation. Why is it 650? Have you
Mhm.
had late payments, missed payments?
All right, welcome back to my channel. So I got a special video for y'all today. I brought on a lender. Her name is Shirley. We're just gonna have a conversation about what she does, some people that she's helped, and maybe she'll be able to help you get your next approval. So welcome to the channel, Shirley. How are you doing?
I'm doing well, doing well. Thank you for having me.
Most definitely, most definitely. So, just want to start off by just asking, a little bit who you are and how you actually got into what you're doing and the type of lending that you actually do.
Yeah. Yeah. So I'm located in North Carolina. The bank is also located in North Carolina, but we provide SBA financing across all 50 states. We provide financing for a lot of industries. Certainly has helped a lot of individuals over the years. Been doing this for well over 7 years now. Got into it before. I used to work at a law firm, doing accounting and finance and stuff there, and then kind of made the pivot over to SBA lending. Certainly, a lot of people know about it, but not as many people know about it that should, and definitely can benefit. It's a fantastic program that I've personally seen firsthand help so many individuals reach their version of the American dream, reach that level of entrepreneurship. Maybe they've already owned a business and just needed some capital and someone to have a little faith, and it has taken off. Or help, maybe you've been working at this place, at your place of employment for an extensive period of time, say 10 years or more, and you think you can do a better job than the owner, and maybe he's ready to retire,
Mm.
and you can purchase that business. It certainly, there's like endless possibilities on the things you can do with an SBA loan. There are some things that are not eligible for SBA financing. For example, the business has to be a for-profit business. So not, unfortunately, nonprofits are not eligible. They can't not be involved in like promiscuous activities such as strip clubs,
All right, we talked about that.
things
Yeah,
of
yeah,
that
yeah, yeah,
nature.
definitely.
Unfortunately, they can't be involved in the cannabis business, even whether they farm or a cannabis store. Although it is legal in some states, it's not federally approved, and an SBA loan is a federal program. So for
Mhm.
that reason, until it is federally approved, it's not eligible for SBA financing. But other than that, it's pretty wide open on the different things you can do. And the SBA loans, they have certain criteria that needs to be met, certain rules and guidelines that need to be adhered to qualify for an SBA loan. The main things that kind of vary lender by lender. Some lenders, POP lender, which are preferred lenders, that have done an excess amount of loans, where SBA has granted them authority to make the decisions, so those approvals on those loans on behalf of SBA. There are some lenders that are GP lenders that they do not have that clearance with the SBA. Maybe they just are working towards that. Maybe they just haven't done enough loans with SBA to grant them that
Mm.
authority. Working with a POP lender certainly accelerates the process, because sometimes when you do have to send a loan for approval to SBA, no one knows how long it can take. It can take 1 week, maybe it can take 3, maybe more. It just
All
depends how busy they are. So definitely working with a POP lender has its perks.
So POP lender is somebody that they've been working with SBA loans for a while, so they're certified. Is that basically what it is?
So SBA gives them authority on their behalf to make approvals on the loan without having to send them to SBA. So that lender still has to follow the SBA rules and guidelines and have all those forms that SBA requires, and the file needs to be notated as SBA requires, but we don't have to send it to them to get approval on that loan. We can make that decision on their behalf
Got
and
you, got
guarantee secured on that.
Okay, so that makes the process a little bit quicker, I would assume.
Yeah, a lot quicker. Like sometimes, before I used to work for a lender, they had lost they were working towards their PLP, and we had sent one loan in and it took 6 weeks to get back. It got approved, but it took 6 weeks. Now that's 6 weeks that everyone is just waiting for them to make a decision on.
Yeah.
So it takes some time. Sometimes you can get it back in 1 week. It just depends. So it's at any time that you have an option to work with a POP lender is always recommended that you do. For the sake of time, they've clearly been doing it for a while, that they already have that designation.
Got you, got you. How does someone go about finding a POP lender?
You typically you can find them online. But one thing to keep in mind, each lender, there's like 3,000 SBA lenders in the US at any given time, plus or minus.
Mhm.
And no two are the same. To do a loan that could probably be a slam dunk deal to us, it could have gone to several lenders before and it got turned down. So
Mhm.
each lender, although they are all SBA lenders, they have different motivation, different criterias. They have different internal credit box in addition to the SBA guidelines and rules that they
Mhm.
follow. Maybe you're working with a lender, they say they do SBA loans, but for them to do one, it has to be fully collateralized, either with real
Yeah.
estate or personal assets or something like that. Some lenders maybe only want to do real estate acquisitions for SBA.
Mhm.
SBA loans. Maybe some lenders don't want to provide financing in a certain industry. So
Yeah.
so each lender is different. Each lender has different appetite, different criteria.
Got you. Got you. Okay. Let's talk about Shirley, because we're talking to Shirley. So I know when we talked a while ago, I know we both come from an immigrant background, from Nigeria. Your parents are from was it Dominican?
Yeah, I'm from
Yeah, yeah,
Dominican
yeah,
Republic.
okay.
I was
Yeah, yeah.
born there, and I came to this country when I was 7 years old.
Yeah.
Didn't speak a word of English. Spanish
Mm,
is my first language.
mm,
Um, Came here. Both of my parents worked multiple jobs. They are both business owners now.
mhm,
Been business owners for about 20 years, a little
mm,
over 20 years. They own two restaurants.
mm,
But when we came here, they worked two jobs. My father used to work at a warehouse for Toys R Us. And then at night, shipping packaging all those toys and shipping them on those you know, uh, uh, semi trucks to get to those stores. And during the day, he would work as a construction worker.
while I was working.
Yeah. So, and until they saved up enough money and they purchased a restaurant that was in distress. And they purchased the real estate and the business, and the business is still standing to this day. Um, and so to me personally, small business ownerships is in my blood. It's
Mhm,
it's 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 a passion, and I always and with all the borrowers that I work with, if it's something that we can't work out right now, I'll explain to you why and what you should do to get us to a point where the answer is yes.
mhm,
And or if someone is looking to purchase something but maybe it's not a good fit, maybe we're seeing some very concerning things in the financials of the business, maybe it has some concerning trends. I bring that out to them because I'm not interested in just writing a loan for someone. That's not my
yeah,
motivation. My motivation is I want you to purchase this business or real estate or start up this business or purchase this equipment to expand your business. I want you to succeed.
mhm,
I want to see that whenever I pass, because small businesses, they have a big impact in the community.
Definitely.
It's not just about those businesses being there or any of like they have a big impact in the community. You know, the locals work there, you know, employs it. The taxes they pay goes to that community, it goes to the school, the neighborhood, everyone knows each other, and it just brings a sense of community. And
Hmm.
and we want to make sure that those small businesses stay around and continue to provide a good impact in the community. And sometimes, you know, it's difficult for them to just walk to your, you know, your local banks and get financing.
Yeah,
You know, maybe you just don't have the collateral, or they don't like the industry or stuff like that. And I think that's the very good thing about SBA. They give incentives to lenders to lend to you on deals that are more riskier. For example, a business that is all goodwill, has no collateral, or restaurants, you know, restaurants, it could be a hit or miss,
hmm,
unfortunately. Hotels, you know, they were heavily impacted by COVID. Some have been able to recover, some have not. But with the SBA loan, they guarantee the lender 75% of your loan. So the lender now has less risk. That 25% is what they carry. So they will always have risk, but it's much less as if they were to give you a commercial loan
hmm.
where there is no government back.
Yeah,
So the possibilities are, you know, you can do more things with an SBA loan that, you know, some people just wouldn't qualify for a commercial loan. Some businesses just wouldn't, maybe because of the industry, collateral, maybe personal resources from that business owner or borrower. They just wouldn't have, you know, wouldn't be able to meet certain criteria for a commercial loan.
definitely, definitely. I don't think I'm pretty sure I didn't tell you this off camera. I'm gonna be honest. One of the things that drew me to you, you know, the way you're talking about your passion for small business owners, you know, how your parents came up and everything. I can hear it in your passion. I can hear that you're actually genuinely trying to help people, not just writing a loan. You know,
Yeah.
obviously, with business, you know, we got to make the money, but your passion for the business. So I was just like, you know, we got to bring her on the channel. So, you know, I'm definitely grateful that you decided to give us your time and, you know, educate us about this. So I appreciate your time. Just wanted to say
Yeah.
that real
I
quick.
appreciate that. Yeah, I
Yeah.
appreciate that. I think, you know, a lot of people think that, you know, the economy in the US is moved by big corporations. It isn't. The backbone of this country is small business owners. You
Yeah.
know, a lot of people think, oh, well, my neighbor, he's a plumber and he comes home all dirty and smelly. But that plumber probably has $2 million cash sitting in a bank account, you know. And some people just think, oh, well, you need to be an attorney, or you need to, you know, just is corporate that makes the money, that makes the US move. And it isn't. What led the US out of the 2008 crash was small businesses. You know, big corporations failed. You saw mortgages take a huge hit. You know, mortgage lenders took a huge hit. So many corporations were impacted. Some of them went away. So what helped the economy was really those small business owners, and we really need to be out there supporting them and educating them. Say, hey, you know, you want to expand, you want to purchase your competition, there are options, there's resources out there for you that a lot of people, they just don't know. They just don't know that those options are out there, those
Yeah.
possibilities are out there. And just spreading the word and educating them. Maybe now is not a good time, but let's look into what SBA financing is. Let's look at the options. Let's look at what your personal financial picture looks like, and let's look at what your goals are. You know, for
Mm.
some people, the American dream is owning a home and working a 9 to 5 job, and that's perfectly fine. But for some people, is being an entrepreneur. And, you know, startups are hard. Startups are very hard. I think I saw the other day, I think it was like 86% of startups fail.
Mm.
But when we're doing a startup, we, you know, we work in great detail with the borrower to understand what is it that you want to start up, where is it going to be located, who are going to be your main customer, well, who's your competition, how are you going to generate revenue, how soon is the cash going to start to turn over. These are all questions that we ask, one for us as well, but also for the borrower to get them thinking.
Yeah.
And another way, you know, some borrowers can reach that entrepreneurship level is through acquisitions. maybe purchase the business from their employer, or maybe they know they've been in the, let's say they've been in the car wash industry for a long time and there's a car wash for sale. Well, let's explore that option. Let's see what the cash flow is of that business. How much are they selling it for? What is included? How long has the business been around and stuff like that. Recently, I did provided financing for a hair salon in Texas. It was a startup.
Hmm.
Before they reached me, they had been turned down by 3 lenders,
Oh wow.
and no good reason. No good reason. She had relocated from Canada here, but she was already a legal permanent resident. Her husband had outside income. She had over 20 years experience in the beauty industry. And some lenders said, no, you just don't qualify, or no, this is not good, or endless reasons.
Hmm.
I worked with her. We fixed her business plan, fixed her projections. We worked on the application, submitted it. Within 2 weeks, I got her approved. And
Wow.
when I told her, she couldn't believe it. And then I told you, if I believed in you, I think this is a fantastic opportunity for you and your family, for the
Mhm.
community, because like I said, she was extremely experienced in the hair industry, had won many awards, prestigious awards in that community, in that industry. So it's a no-brainer. And the type of salon she wanted to put in that area, they had none. I looked up with her all the competition in the area. How long have they been around? What kind of services they provide? And we just finished the construction on that business. Is up and running for several months now.
Nice.
And she told me, I've already exceeded my first 3 months projections.
Mm.
We
Praise
did
God.
the leasehold, yeah, we did the
Yeah.
leasehold improvements. We gave her working capital, purchased the inventory, purchased the equipment such as the hair blow dry, stuff like that. The construction did take a lot longer than anticipated. The general contractor involved said it was going to take 6 weeks, but it ended up taking 6 months.
Wow.
Yeah, but stuff like that happens with construction loans. But she's open. She is super excited, and I have a drawer full of thank you cards,
Mm.
and they mean the world to me, you
Yeah.
know. Because and every time I pass by certain areas, they're like, oh, I'm glad that you see the business is full, is thriving, and you're like, I'm glad.
Yeah.
That's why I did it. That's why I helped them. And sometimes it is an uphill battle. Sometimes, underwriters are like, oh, well, I'm not really sure. And it's your job as the lender upfront to have those tough conversations with your client and say, okay, why is it that you want to acquire this business, or why is it that you want to start it up? The story has to be there, and the story has to make sense. It can't
Mm.
be a situation where you've always been a construction worker, but you want to purchase or start up a restaurant because you go to this local restaurant often and they're always full. They're always full to
Yeah.
capacity. That's not a good response. But let's say, well, I've been a chef a couple of years ago. The chef for Panera, he's been the executive chef at Panera Bread
Hmm.
for 10-15 years when I did his loan. And he said, I'm tired of the corporate. I'm tired of this. He's
Mm.
like, I'm a chef. I want to be able to touch all the food. And he just created all the menu for Panera Bread, and he was always changing them and all this stuff. And he bought a small coffee shop in Denver, Colorado. And he added all this equipment and expanded the menu, and now it's a full service breakfast and lunch restaurant. And he was able to do that. But even prior, he told me he had been to 5 banks prior to finding me. And we got his loan approved, and he's doing super well, super well. And it's just finding those people, understanding their story. Why is it? Because sometimes we also have situations where we have a customer come and say, oh my God, I want to buy this business. It's close to my family.
Mhm.
My kids live here. I love this area. This is such a cash cow. And we look at the financials and the financials aren't there. There's a lot of concerning trends. Maybe, the seller says it makes a certain amount, but when we go through the financials, it only makes, 1/10 of that.
Mhm.
And we explain to them what we find and stuff. And sometimes you have some customers that they just get blindsided and they have these blinders on that they don't want to hear what you're saying.
Yeah.
Because they just know they just want to go purchase this business. Unless you're telling me, yes, this is a slam dunk deal, they don't want to hear it.
Mhm.
You know, we sometimes come across that, and it's our job to explain to them, because whether it's an SBA loan or any kind of loan, you don't want to make a mistake because you're still going to be responsible for that loan.
Yeah.
So you always tell everyone, let's take the time, let's go through the financials, let's understand what the full picture is. How have they been operating the business? How are you going to operate the business?
Mhm.
And stuff like that to make sure of its, longevity.
Yeah.
That's what we want. We want to make sure that, one, you are able to repay this loan, but also that you're able to reach your goals, that it's not going to negatively impact you financially.
Mhm.
And we certainly come across folks like that, but
Mhm.
we just have to redirect them, and make sure, one, that they truly do want to do this, and two, that it's a good opportunity. It makes
Definitely.
sense all the way around.
Yeah, definitely. Okay, so I heard a lot of good things. So the hair salon lady, 20 years,
Yeah.
she got denied by multiple people, and then she came to you. The chef, he got denied by like 5 lenders, and then he
Yeah.
finally came to you and got approved. What is it that like, what was the difference in terms of, why you were able to go ahead and get them approved? I know you mentioned the story, but just for the viewers, is there anything else that we gotta be aware of
Yeah.
when it comes to that?
Yeah, so with her, I said, okay, her husband, he wanted to be on the loan because they were 50/50 owners
Okay.
of that hair salon. So they already had set up their entity and all this stuff. So he wanted to be on the loan. And I said, okay, well, he's gonna keep his outside income. And he made a really nice salary, and that
Mm,
nice salary more than covered their household expenses. So they
mm,
didn't need to start drawing a large salary from the business right off.
mhm,
So I explained that. And also on Sundays, they go to church
mhm.
and they're members of the church, and they provide like the musical um what is it called, like the music and stuff for the church. So they do all this, they bring the systems and everything, so the church services can play the church music and stuff. And they got paid very little, but they still had outside income from Sundays from church.
Yeah.
So we wanted that. In Texas, we couldn't place a lien on their property because of the Homestead Act. So we didn't need their primary residence. So we restructured the loan to withdraw that salary, that they didn't need this large salary that they had factored in. And the reason they had it in there is because a previous lender told them, oh, well, SBA is not going to approve your loan without a salary. But if, as long as you can explain, that you do have outside income, that outside income is going to continue and it covers your household expenses, you don't need to put a salary because you don't need it. That if that's not the case, then we do need to factor in, we need to do the math on what your monthly expenses are on your home, and for your family, that then we'll factor that in. But if we have outside income, we can take that off.
Mm,
And also, like I said, startups are hard, but when you have a proper marketing campaign, you are a member of the community and you know what you're doing, people are gonna come. And as the construction is going on, she was going door to door telling other businesses about her business, and other people's in the community knew. And like I said, just in the first 3 months, she said she already surpassed her half a year projections, you know, and that's fantastic. And for the chef in that I mentioned from Panera Bread, the main reason that he was getting declined for other lenders is he was going to the wrong lenders. And like I said, restaurants are not all lenders have an appetite for.
Mm,
There some lenders do, some lenders don't. And also with his the way he had it, structured, he was going to do a large overhaul of what that business was, and didn't do a proper job explaining as to why he believed it was going to be well received. Well, after asking him questions and a long conversation with him, well, he explained he had already moved to that area, and he was talking with the locals and stuff, and what is missing, and he had done a good workup on his own of the restaurants that are local, restaurants that are comparative to that business he was buying, and to how he wanted to expand. There was nothing in that area for it. So there was a huge demand that was just unknown to those other lenders, because one, they weren't interested, and two, probably didn't ask the right questions, and three, they didn't probably want to, this is what was they presented to them. Do we like it? Yes or no, and that's it.
mm,
You always want to work with someone that asks you the right questions, that really tries to understand what it is that you're doing.
yeah.
Not someone that, hey, I would like to purchase a gas station. Oh, sorry, we don't do gas stations. Well, let me hear, why do you want to purchase a gas station? Where is it located? What is your past experience? How are you going to manage and operate this place? So there's so many things that, some lenders, they just maybe don't have an appetite for, or different things, it could vary.
Mm-hmm. So it's just digging deep and kind of figuring out if it makes sense, essentially.
Right. Because everything has to come full picture, and it has to make sense. Because it does have to be submitted to underwriting. There's an underwriter that needs to be able to pick up the file and know and understand what it is you're doing, knows why it is that you're doing, how is it going to benefit you, how is it going to benefit the business. In essence, you have to think about it, like, for example, like when you're purchasing a business, you have to think, okay, well, how do me and my personality and my goals and my ambitions marry perfectly with this business?
Mm-hmm.
You have to think of it kind of like a marriage. How are we going to work together long term? How is it going to benefit us, and make sure that we both have, good compatibility?
Mm-hmm.
Because sometimes, let's say, for example, a couple of years ago, a guy, he wanted to purchase a gym that was women only.
Mm,
And when we got into the nitty-gritty of it, majority of the women were Muslim women, because they can take off their hijab, but they can't do so when there's a man present. So it was woman owned and catered to women. Although it was eligible, because another type of business that's not eligible for SBA financing is like businesses that discriminate. So it can be a men only business or a woman only business. So that one was eligible, because although they catered to women, it was open for men, just no men had ever enrolled. If a man were to come in, they can enroll in the gym. They just never had before, because it's catered to women and stuff like that. And so once we found that out, who the main customer base and the reason they were there, then he said, you know what? I told them, I said, I feel highly concerned for you, because once you purchase this, and it would have been a great opportunity for him, because he used to work as a personal trainer at an Orange Theory.
oh, okay.
And he worked there for a long time. So it would have been a good acquisition. But once we found that out, I explained that to him. I said, I think it was like maybe like 45% of the customers were Muslim women. I said, you run the risk of losing them, because the reason they're enrolled here is because they can exercise without having this on. But if you're there, you're the owner, they'll have to have it on.
Yeah.
And maybe they'll leave, maybe they won't, but it is a risk. And he said, you know what, I agree. And he ended up passing on that, ended up finding something else down the road. But we found that out, and good thing we did, because had he purchased it, he may have lost a substantial amount of customers, and lost that revenue that he was counting on to pay this loan, take a salary, and etc.
Yeah. Yeah. Gotcha. Okay. Yeah. So I mean, a lot of different things happen in this type of situation.
Yeah, and no two loans are the same. You know,
Yeah.
we can do an HVAC that is the same size in one state, and then we do the neighboring state HVAC, same size, same number of employees, same number of customers, and those transactions will be completely different. You
Mm,
know, we can write one loan for you, you know, to expand a podcast or whatever, and then we do another loan to expand that podcast. They're going to be completely different. You
yeah.
know, same processes are the same, but you know, you'll be involved doing different things. You know, each business is going to be doing something different.
Hmm.
Just so many moving things, so many components that, you know, you really don't think about until you're in the process doing it.
Yeah.
But once you do it and you close the loan and you see this business how is successful and it's doing well and you're thriving, you're like, okay, well, this process was worth it. I would do it again.
Yeah, definitely. Okay, so the chef, the hair salon, are you allowed to disclose the amount they got approved for, or just like a range for the viewers?
Yeah, I believe I have it on my LinkedIn. The chef, it was about 2 years ago. His was about 1.4 million loan. The
Mhm.
hair salon was, I believe it was like 330,000.
Okay.
You know, here the smallest we can do is 500,000 up to 5 million. That's the SBA max. Unless there's, you know, real estate acquisition, and then we could do a 504
Mhm.
that allows us to go a little bit higher, but that can only be on equipment purchases or real estate purchase, because a 504 loan has to be fully collateralized. There's no exception to that one, but the 7A is super flexible.
Got
Um,
you.
but you know, if there is a loan that's a little bit smaller than that 500,000, as long as it's within that 350 range, we can probably make an exception for. Um, but you know, we're open to all industries. But although there are some industries that have a little bit more scrutiny to them,
Mm,
like restaurants, breweries, hotels, some gyms, you know, they just we see a lot of stress right now in breweries and restaurants. And we're also seeing a lot of stress from in gyms, fitness, they, you know, places and hotels. They haven't been able to recover from COVID. Some have bounced back very
mm,
well, but not
mhm.
all.
Yeah,
So we're really looking, it's a, you know, still same process, but we look a little more closely on those to make sure that, you know, it is a sound investment.
got you. Okay. So just for the viewers, 300 is minimum, but let's say 500 up to 5 million is typically what you tend to deal with.
Yes, yes, absolutely, absolutely. But other than that, we are open to all industries. You know, we do plumbing business, HVACs, um, um, general contracting businesses, restaurants, breweries, you know, childcare, those daycare centers, um, seem to be very popular. We do franchise. Um, like Camp Bow Wow, several others, but you know, Surf Pro franchises and even non-franchises. We do startups. It's just a matter of, you know, the very important thing is that you have a borrower that has either direct or relatable industry experience. Like I said, it's
Mm,
going to be a tough sale if you're like, you know, work construction and want to get into the restaurant industry. Like I mentioned, the restaurant industry is a big beast in of itself, and you
yeah,
have to have knowledge, you have to have experience working in the restaurant industry, you know, to be able to make sure that once times get tough, you'll have enough knowledge and experience to navigate that.
definitely. Definitely. Okay. So I know my audience, we teach credit and things of that nature. So I know that a lot of my audience are always looking for business funding, whether it's a real estate, e-commerce, credit related. So that's why I
Yeah,
wanted to have a conversation with you, because SBA is a different type of funding.
yeah,
Can we talk about the credit aspect? I know we
yeah,
talked about it a little bit
yeah.
offline. I just wanted you to talk about it a
Yeah.
little bit.
So there is no like set in stone, you know, a certain credit score the person needs to have.
Yeah.
You know, in essence, you know, let's say like I think 650 would probably be the lowest. and it would have to get an explanation. Why is it 650? Have you
Hmm.
had late payments, missed payments? Do you have a lot of debt? If it's missed payment, late payments, is it limited to just one period in time? Or is it maybe it's a habit that you've just you just missed payments, maybe you just didn't have the money or you forgot. Because then that paints a different picture, as opposed if we can limit it to a small period in time. Maybe you were unemployed for that period of time. Maybe you ran into some health issues and couldn't work, or maybe
Yeah.
you ran into some health issues and you had to use all of your cash to pay for that medical visit or for medicine or something like that. That we can get behind of and provide an explanation and get the underwriter comfortable. It becomes more of a problem where they have a low credit score, let's say 650 or under, and you just see an extensive period of late payment or missed payment, or they just have a really, really high level of debt.
Mm-hmm.
If they have a high level of debt, is kind of understanding the reason. Well, how long have you had this debt for? What were you using your credit card for?
Yeah.
Because sometimes we see people with a lot of debt and maybe they've used their credit cards to go on a $10,000 family vacation that they couldn't afford, or maybe they go out to eat at fancy places and put it all on their credit card that they maybe
Yeah.
couldn't afford to go so many times. So it's stuff like that, because once you establish a pattern that you just purposely have always been late or missed a payment, it kind of goes to your character for and the eyes of an underwriter. It's like,
Yeah.
well, this person acquired this debt. No, he was responsible for this debt, but didn't pay as agreed with that credit card company or that mortgage lender or car notes. And we can see that is over a very long period of time. That is not just you know limited to a small period in time, to a small period in time. It goes kind of to their character, because they think, oh, well, how can I be sure that they're going to repay us back? How are
Yeah.
we going to know that we're not going to be in the same boat as those other lenders? And
Yeah.
and that kind of becomes the issue.
That makes
Um,
sense.
the other thing underwriters look for is kind of, I mentioned before, that you have either direct or relatable industry experience. You
Hmm.
know, if it's someone that has been making, let's say, over, six figures for over an extended period of time, but they have zero money saved up, what has been going on? Your
Red
household
flag.
expenses is this. What else have you been doing with your money? Or maybe it's, people that have been making a regular salary, but they have been able to save and they are ready to invest in this business or real estate. One thing I wanted to mention is, like, if there's a business owner that already owns the business is established, and they're renting this location and they want to purchase that piece of real estate, we can look at the option of providing 100% financing on that.
Mm.
But they have to occupy 51% or more of the real estate. So if the square foot is 3,000, they have to occupy more than 1,500 square feet. The other portion is that the business has to be able to support the debt on its own. We cannot count that the income from the 49% lease space as the source of repayment for the loan. But
Gotcha.
as long as those things can the criteria is met, we can certainly look into doing 100% financing.
Hmm. Sorry about that.
No.
So do you have documented how much like you've funded people? Like I just want to know like an
Um,
amount, like a millions you've amount. Have you tracked that? Is that something that y'all track? I don't know. I'm just curious.
yeah, I do track it. I don't have it in front of me, but yeah, we do track it per year.
Okay.
We all have goals that the bank assigns that we all need to reach per year. So yeah, I track it year over year. I
Gotcha.
have to
Gotcha.
look it up and tell you. It's pretty cool.
Okay, most definitely. We can get that later. Was
Yeah.
looking for, I was like, okay, we could put that in the title or something. But so we've kind of talked about, I guess, the things to look for as far as
Mhm.
red flags. Can we talk about some of the green flags to look for? So I know
Yeah,
you said like, history in the business, but just some certain things because I know someone's watching right now. They're just like, oh, Shirley's talking that talk, I want to tap in. but I would just want more information, more confidence. I would actually be able to qualify.
Yeah, for example, like when you're looking at a business acquisition, for example, and you're looking at the financials and you see a substantial amount of add backs, we can accept them, but make sure you verify that. Make sure that you request from the seller or or the broker, if there's a broker involved, that those add backs are legitimate. Get the proper documentation that shows they didn't just pull this number out of nowhere, or it's a made up number. Like I said, we always trust, but we always got to verify. That's one of the main things. Some of the green flags, I always tell people, we as the bank, we do due diligence, we do a deep dive of the financials, but you
Yeah.
independently should do one as well. Whether it is that you do it yourself or you hire a CPA or a financial consultant to go through them with you and make sure, or do a QOE report. Those are very important, especially on those larger size transactions. You want to do a quality of earnings report if it's within your budget. And honestly, I think everyone should always make room within their budget to do so, because like I mentioned before, you don't want to make a mistake. You don't want to make a mistake of $500,000 or a $5 million mistake, because you're going to carry that for a really long time. It's going to take you a really long time to pay that off. It's not that you can just oh well, I'm just going to shut the doors and it's all going to go away. It doesn't work that way. Definitely doing the proper due diligence. And when you want to start up a business, make sure that you look at the area you want to start up that business. Is there a market for it? Is there a need for it? Is there any competition in the area? How, stuff like that. And if it's a franchise, do the diligence on that franchise. Ask them questions. In what areas are they located? How long have they been in business? Maybe they can share the financials of a local franchisees. They do that, that's not a problem. And really get the information, and make sure that all of your concerns are answered. I tell people, even if we get you approved, we go all the way through the closing process, but you're not 100% sure, let's stop and address what your concerns are. And if you can get comfortable, then great, fantastic, we go ahead and close. If you can't, then it's perfectly fine. The money you've spent thus far is nothing compared to this loan you would take if you were to sign on the dotted lines.
Mm-hmm.
It's not something a lot of people want to hear, but like I said, I want the best for you. I don't just want to write one loan for you. I want to write this loan and make sure you're successful, and that you come back and tell me in a year or two, hey, I'm ready to expand, open up my second or third location. So it's very important to kind of go through that and understand, what the full picture is. Well, what is it really going to take? And we always also make sure that that aside from the working capital we give you, that you have personal funds left over after your injection, for a rainy day. So many things can happen, so many things can pop up that you may have not known prior or thought that could happen. And we want to make sure that you leave the working capital strictly for the business and not having to pull it for your personal expenses. So we always look for that they have some amount of post-closing liquidity.
Okay. Gotcha. Okay, so we're gonna be wrapping up in a little bit, but I just wanted to ask you. I know you mentioned the chef, you mentioned the hair salon. Would you consider those like your favorite moments as far as getting people approved, or what would you say? Maybe was there a favorite loan that you had?
We'll be here for years. I tell you, I love every single loan that I do. There are some
That's
people
a
that
safe answer. That's a safe answer.
there was one, I'll tell you, I think that was the last one I posted on my LinkedIn. I have to post a couple more. So this loan was for 6 Walmart stores, coffee shops. So you see, when you go into Target, they always have Starbucks. Well,
Yeah.
Walmart is doing this, but with small business owners. And this small business owner, he owned a small coffee shop, and he got into partnership with Walmart, and Walmart is going to put him in all 1,500 stores. Well, we're starting with 6. Walmart wants to start with 6 and then expand. So we did the construction for all 6 stores.
Mm-hmm.
In addition to that, this guy had 20 affiliates. Some were businesses, some were just holding companies for commercial real estate properties that he owned. And there was so much intricacies in that loan. He had went to several other lenders, couldn't get approved. Got here. It was a very long process. It was a work in progress. It was always a moving target. It was a ton of work. But he is open. He is so excited. Walmart is so excited. The stores are in different areas of Georgia. Some are in Atlanta, some are in the like immediate areas of Atlanta, but they have been so well received from the community, such fantastic feedback, and they're doing fantastic. And yes, it was a very, very, difficult loan to get through because there's just so many moving parts. And Walmart itself is, they have a lot of moving parts as well. But we were
Yeah.
able to navigate that because we had a borrower who he was determined, and we were determined to get it done for him because we saw the opportunity. We knew it was a great opportunity for him, and it made all the perfect sense in the world. And as you see that when you go into a Target, the Starbucks line is always so long.
Yeah.
And Walmart, they have even a bigger foot traffic than Target, and they don't offer those services. So it was a fantastic opportunity for him. And like I said, it was a very long and extensive process. But we got it done. We got it done. He stood by. I told him, hey, it's gonna be a long and extensive process, but you stick by us, we're gonna get you there. And I know, and he even said, man, there were times I just wanted to throw in the towel and quit.
Oh man.
But we got
How long
there.
was that process?
So he first came to us in August, and we ended up and then getting all the documentation, from Walmart, from the general contractor, the plans and specs and permits and all this stuff. He closed in January.
Okay. Okay.
So with a guy with over 20 businesses and affiliates, and with Walmart and all these constructions and all this stuff, I think it was a fairly good timeline, but it was longer. Typically, on average, SBA loan takes about, maybe 45 to 60, 70 days, just depending how quickly we can get the documentation in and submitted.
Okay. I mean, August to June, it's not as bad. Yeah, that's a pretty good timeline. And how much was that loan for?
3.1 million.
Oh, nice. Okay. So
Yeah,
I'm
because it was
very happy.
the construction of 6 stores and equipment purchase and the inventory. But it was amazing to see each store open, and the how well received it was. And so many companies like, oh yeah, sometimes when I come to Walmart, I have to stop at the Dunkin' Donuts or Starbucks down the road before I come here because there is no coffee here. Well, now they offer that, and they're working on for Walmart to integrate them into their app, so you can order it through the Walmart app, and when you arrive it's already ready.
That's
you
dope.
know so it's fantastic because not only is Walmart expanding their business and their footprint, they're giving the opportunity to small business owners, local businesses that employ local people, and even employ even more because now they have to staff these coffee shops inside Walmart, and it's all employed by locals.
Yeah, no, that's amazing. That's
Yeah.
amazing. That's
Yeah.
amazing. I appreciate that. I appreciate your time,
Yeah,
Shirley,
of course.
blessing us with your presence and information and everything. If you're watching this, make sure you like, comment, subscribe. If you feel like, you're in that position, expanding your business, you want to buy a business. If you're just related, I'm gonna leave her information below for a way for you to get in contact with her, and we'll make sure it makes sense. With that being said, y'all have a blessed one.
You too. Thank you. Bye bye.